everyone. Thank you for coming. I'm Abigail again, and this is AJ. And we'd just like to introduce Lindsay Schrier of Crow Holdings. She works there as an investment associate. So.
All right, just to get us started, how'd you find yourself in the commercial real estate industry following a major in international studies here at Boston College? And are you able to utilize knowledge from your major in your everyday work life?
Yeah, I would say absolutely. I know international studies is not the first major that you think of when you think of real estate, but you would be surprised how well you can sell it during an interview and also apply it to what you're working on. So when I was at BC, I guess to give my career path, I started out as an international studies major. I was interested in politics and economics, which both are really applicable to real estate. I was a women's and gender studies minor as well. And then while I was at BC, I was really involved with the Career Center. I was a peer career advisor, which also helped me learn about different career paths. And I was on FACES Council and helped plan events for them. And then I got involved with the Corcoran Center, which is how I got interested in real estate. So the summer going into my junior year, I applied to the Corcoran Center internship because I was really interested in that urban action piece. And I had no idea that by the end of the summer, I would be all about the real estate piece. So it definitely was a great way to get exposure to other career paths that I hadn't thought of. I did an internship at like the least real estate-y internship that they had, which was at Boston Medical Center. And it was a great experience working with Vital Village. But every other week we would come to campus and have lectures. And I was like, oh my God, this real estate piece is so interesting. I feel like I could talk about it all day long. There's so many different paths with it. And when I came back to campus from studying abroad that fall, I became a research assistant with the Corcoran Center, and that's really when I started taking classes with Professor Chazen, and also was involved with the real estate club and helped plan different events through the Corcoran Center, and just really got some exposure. The summer after that, I was like, I need to actually do something more real estate focused, and so I interned at an affordable housing developer in Roxbury, and that was called Madison Park Development. I really loved the experience. The people were wonderful. I learned a ton, but I didn't think that development was for me. It was a little bit slower paced, and I kind of wanted to see a lot of different projects, a lot of different asset classes. And so I didn't know exactly what I wanted to do even then. So by senior year, I was applying to internships, or I was applying to jobs post-grad, and all my friends who are in consulting or investment banking, they all had their jobs lined up, and I was kind of nervous because I was like, oh my God, it's almost graduation, and I've been applying to stuff, and I know what I want to do, but I ended up getting connected with BC alumni who work at AEW Capital Management, and I got an offer from them, which was amazing. It was the best place to start out my career. AEW does capital management, and I was in the research group. And so I got connected to that role after talking with people there about how I was an international studies major, and so I wasn't necessarily like a whiz at financial modeling at that point, but I was a great writer, and I was really interested in economics, and so that was a good fit for me at the time. So started at AEW, worked my way up from analyst to associate, was really involved there with the Women's Network, and so I helped co-found our mentorship program that we had. And then after about 5 years, I left AEW in January 2023 because my boyfriend was graduating medical school and applying to residency, and he didn't know where he was going to be getting in. And so I was kind of like, this is my time if I want to take a bit of time off. And so I took a few months to travel, and it was awesome. And then when I came back, he had gotten into a program in Boston. And so I was like, perfect. Now I can apply to jobs. Now I know where I'm going to be. So I ended up applying to Crow Holdings. And so Crow Holdings is a Dallas-based company. They have a development arm, they have a capital investment arm, and I'm on Crow Holdings Capital, which is the investment side. And they have a big campus in Dallas, very beautiful, looks like UVA. It was modeled after like Monticello, it's gorgeous. But the Boston office just opened like within the last 2 years. And so it's very small. We only have 4 people working out of the Boston office right now. And so it's interesting because it's such a big company, but you have this kind of like startup energy because you're figuring out systems. You're on a small team with kind of people who are higher than you, and so you're learning a lot. So it's kind of long-winded, but I felt like I wanted to give my path. International studies is maybe not the first thing you would think of, but I thought it was really applicable, especially on the research side. And even now I'm not in research anymore, I still find that having my background in research has been really helpful now that I'm on the investment side.
So given the current market conditions, how has your approach to investment opportunities evolved, and how will expected rate cuts affect your investment strategy?
Yeah. So when Crow Holdings decided to open this Boston office, it wasn't just an extension of their regular business plan that they had in Dallas. They wanted to open a special situations capital investment platform. And so that's kind of why our office was even open, because interest rates are really high. They wanted to figure out a different way to invest than just, your bread and butter core assets. And so they opened this Boston office to be specifically focused on kind of unique deals. So we're looking at partial interest, secondaries has been really big, recapitalizations. And so they're just kind of very niche kind of investments that I feel like are more available due to the high interest rates. So even we just had a recent deal that was pref equity deal that maybe if interest rates were lower, then they might have gone down the path of like releveraging instead of getting additional pref equity. So so we've been very active even despite higher interest rates. But I think that even as interest rates start to come down, we'll still have a lot of opportunities because it's been almost hard to know where to price assets because there's been so limited transaction. So if I'm looking at a deal that's an apartment building in Atlanta and no one has bought an apartment building in Atlanta in 2 years, we don't really know what to pay for it. And so I think once transactions start picking up again as interest rates come down, then I'll have the ability to at least know where pricing is, kind of get a sense of the market better. And I think that'll be definitely helpful.
Awesome. Jumping back to your time at BC, can you talk about your experience with the Corcoran Center and how it helped prepare you for your work at Crow Holdings?
Yeah, absolutely. So doing the internship program was a great experience. Even though it wasn't necessarily the path I ended up going down with development or with that urban action piece, it ended up being like great exposure to the kinds of jobs that there were through meeting other people who did different kinds of internships, through different like workshops or classes like this, or just getting different kind of exposure. I also think doing real estate field projects was an excellent way to have some experience that I could talk about during job interviews. It was definitely something that I always brought up when I was applying for my first role out of college. I did the Argus training on campus, and I will say you definitely learn a ton on the job. It's great to have some exposure before you come, so you at least are kind of familiar with it and kind of just have a little bit of exposure, I think is definitely helpful. I will say you also learn a ton on the job in terms of Excel and modeling, and like no one ever expects you to come in and be a whiz and know everything. That's why you're there to learn, especially when you're just starting out. Like the lingo, knowing what different acronyms mean or what's important, or even though I'm on the investment side, knowing how development works is helpful in my job because then I understand where deals are and the life cycle that they're in. And
so would you say you're more of a generalist, or do you focus on specific asset classes?
I'm definitely more of a generalist. So since our platform is more special situations, we also look at niche product types. So in my last role when I was at AEW, it was very core focused. So I was assigned to work on apartment and industrial, and they were very just simple. You're like one-off deals that were kind of straightforward. And then in this current role, I'm looking at more niche product types. So if we're looking at industrial, we're looking at data centers, if you're counting that as part of industrial. We're looking at industrial outdoor storage, which is an asset class that I had no familiarity with before. If we're looking at multifamily, it could be build to rent communities or student housing. So it's always kind of a little bit different. And so it's good to have the generalist background, but it's also, I feel like I'm learning a ton now, especially as we're like dipping our toe into the data center world, learning a lot about different kind of product types.
How would you say Crow Holdings is implementing new types of technology such as AI, and what does that mean for the future of the company and the industry at large?
Yeah, so I think the drive for AI has definitely been a reason that we started looking at data centers. We were not sure, how long the demand for, or the increased demand for data centers is going to last. I caught a little bit of the last lecturer who was talking about how, as the technology gets better, maybe they need smaller space. And so that's definitely a consideration. Power and water is also a huge consideration. But when we've looked at data centers, we've been interested, there's, different kinds of data centers, which is also something I'm just recently learning. But they have hyperscalers, which are really large, and that's going to be for your, Meta and Google, and maybe they're working on AI in those kind of like larger data centers. And then there's another kind of data center called co-location, which are smaller. And so you might have maybe a hospital that wants to keep their private medical records there secure. And so that demand isn't just driven by AI. Other users are also using those kind of co-location data centers, which is why we've been looking at that, because we don't know where AI is going to go. It's definitely a driver and something we're thinking about, but who's to say? I also think that because of AI, it's driven me to want to diversify my skill set. I feel like when I was just working in research and I was just writing and making a couple charts, I was like, I need to know everything, because the more skills you have, the more helpful it is for your career. So that's why I wanted to go more down the investment path and learn more about financial modeling and be on the acquisition side now.
Can you describe your average day in the office and perhaps give an insight into a recent project you worked on and your contributions to its success?
Yeah, so every day is definitely different. I think what's helpful to know is the life cycle of a deal, because I'll have multiple deals that I'm working on that are in different phases, and I'm trying to kind of juggle a couple different things that as they're moving through the deal life cycle. So the first part of the deal life cycle is when it's just a lead. So we'll hear about a deal, we'll be interested in it, and so we'll want to get more information. So one of my responsibilities is to process NDAs. So the GP or the developer or whoever owns this real estate has private information about the deal that they want to share with us, and so I'll process an NDA in order to get access. Once I have the materials, I'll review them, try and make sense of everything. And so the deal materials can include an OM, which is like a PowerPoint deck that has information and a lot of marketing language about how great that real estate is. And then they also have their financials. So I'll get to see how has this real estate been operating over the last few years. They'll have their budget, so how do they expect their real estate to operate over the next year or next few years. If it's industrial, we'll get Argus files, and I'll put that into Argus and try and understand, what are the rents that they have, what is the rent growth that they have. And so I'll get really familiar with their materials and how they're modeling it, if they have a model that they're providing to us. So when a deal then, if we are like, okay, this is something we might be interested in, gets moved to initial diligence, and that's when I really want to dive deep into this opportunity. So I will try and tie out what they have for their materials to our model. So I'll take the rents that they have, the rent growth, all of their assumptions, put it into our model, and then see are our returns what their expected returns are, and if not, why. I'll be like, oh, am I missing the deal economics? What is the promote? What is the fee structure? And then I'll also put in pricing. And so I'll think about what are the cap rates for this product type in the market, and then what should the price be, especially if we want to get to the kind of return that we're looking for. So we're value add investors. We're not going to invest in anything unless a deal is like at least a 14 IRR. And so if the price is too high, then a certain deal is not going to happen for us. So we'll come up with pricing guidance that is a range that says, okay, if we think their rent growth assumptions are accurate, which we might also change those if we think that, maybe the market doesn't show as strong rent growth, or we think that the rents that they're assuming are too high, and we adjust it, what is the price that we would pay for this to make our expected return that we need? And if we come back to them and they say, okay, that's kind of in the range of what we're looking for, then we would move that forward to final diligence. And that's when we're doing our site visits. If we were going to fly out to an asset to tour it, if we wanted to, meet with the sponsors and get a sense of who they are, because for us, the kind of deals that we do are very long-term, and we work with partners. And so we really care about underwriting the people that we're going to be working with as well. So if we're coming in as a partial interest, we want to know who we're owning it with. We want to know who's operating it. And we want to get comfortable with that. And then we'll move forward to closing the deal and securing it. And that will mean, preparing an investment memo, presenting it to investment committee, to our investors, and make sure that everyone's on board with the deal. And so as I go through the week, on Monday mornings, we have our pipeline meeting where we talk about what are the deals that are active, who's doing what did you do last week on it, where is it now, have you reached out to them and said, you sent me the OM, but you never sent me any financials, how am I supposed to, you're back and forth with people trying to get all the information you need. And so you give your update and talk about your plan for the week ahead. Another piece is since we're such a small office and in Boston and we're still just starting out, I'll work a little bit on asset management, a little bit on investor coverage because we're a small team right now. So each week I'll update our investor deck. So when we're pitching to new investors, new clients, we have to make sure that we're talking about our recent deals, what returns we're targeting, where we are in terms of different deals. So are we closing this big deal or not? And so I have to be aware of where we are with all of the different deals throughout the week.
And then if you had any tips for BC students and college students at large for breaking into the industry, any tips or pieces of advice?
Yeah, so I would say definitely getting in contact with BC alumni. I think applying to jobs cold is really hard. So if you just go on LinkedIn and you submit 50 applications and you don't know anything about the company or you don't know anyone who works there, it's going to be hard to be looked at. But I think if you're reaching out to BC alumni, or maybe someone went to high school with you, or maybe you have another connection on LinkedIn and you can get in front of someone or talk to someone on the phone, have a chat with them about, I'm interested in this career path. I don't know, what the next steps are. That's always really helpful. I know with both jobs that I've had since graduating, I knew someone when I applied. And both jobs were not posted online. When I applied to AEW, I had gotten in contact with someone in HR there who got in contact with someone in research, and they were like, we're kind of thinking of maybe looking for someone, maybe Lindsay should talk to them. And so I talked to them, and they kind of were like, you know what, we think you'd be a good fit. And that was before there was even a role, really. And it was the same with this, where they knew they wanted to hire. I got in contact with them because I was involved with a women in real estate group that I had met, someone else who knew them, and they talked to me on the phone. They brought me in for an interview, and that's how I got that role. So definitely getting to know people is really helpful. And then I also think that when applying to jobs in real estate, it's very cyclical, and it's also they hire as needed. So I remember senior year being like, oh my God, all my friends in investment banking already have jobs. Why can't I get a job? And real estate is not going to hire a year out, I mean, sometimes they will, but it's pretty rare to be like, I know exactly what I'm going to be doing when I graduate, months out. And I kind of wish that I had just spent time working on my connections, figuring out what I wanted to do and talking to people, but not necessarily trolling LinkedIn, looking for jobs to apply to that if they were hiring in December, they wanted someone to start in January or February, they were never going to hire me. So I think just knowing, where to invest your time and what the most helpful piece is. Yeah.
So I guess we can open up questions to the group now, if anyone has any.
I'm a senior here studying finance and international studies minor. I was wondering if you could speak a little bit more about kind of your unique background and how international studies, political science might differentiate you as a potential job candidate, but also might inform some investment strategy.
Absolutely. So when I was an international studies major and I knew I wanted to go into real estate, I decided to kind of tailor anything I could apply to real estate. So I had like my senior seminar was international politics of climate change. And I was like, I'm gonna turn my, like, not thesis, but like final senior seminar paper into something relevant to real estate. So I talked about climate change and green building and sustainable real estate and kind of tailored it towards that. And then I also had I took sustainable cities. That was, international studies related, but I definitely made sure when I had a paper that I could do something that I tailored towards real estate. So you can kind of, if you want, like, find a way to connect it to real estate. I think with international studies, real estate is so important to our world. It's so interconnected. It's so relevant to economics and politics that I think you can kind of tie it in if you want. And I think that being able to write about your perspective is also really helpful. When I was at AEW, I would write our quarterly market outlooks for apartment and industrial. So I had to be familiar with what's happening with capital markets, what's happening in the world. Are people not going into the office anymore because of COVID at that time? And what was that doing to office investments? Were people doing more online shopping? And what was that doing to retail investments and industrial also? And were people ordering their groceries online? And so were we, going to start investing in cold storage because of grocery transportation or vaccine distribution in cold storage too? So it's definitely applicable, and I think if you're interested about people, if you're interested about demographic changes, where people want to work, where they want to live, international studies can be definitely very relevant. So it's all about kind of how you spin it. I think part of that is working at the Career Center as a peer career advisor. I definitely was able to think about, how does this, what I'm learning in class, how can I make it tie into real estate, which I think you can find a way sometimes.
Thanks, Lindsay. I'm Ryan. I'm a junior. I was wondering, you mentioned looking through the OMs and the financials. I was wondering what you're looking for, why you're looking through those, maybe some red flags, some green flags that you're looking for when you're analyzing that.
Yeah, so I want to see how the assets have been performing. So whenever we're investing in a deal, at least with my group, we're always looking at portfolios. So we're looking at multiple assets at once. And so it's important to kind of understand how each of them work and not just, look at it overall, but to really dive deep and break it down. We're looking at the financial statements that have happened in the past because we want to understand how do they think this asset will perform in the future, and is that backed up by anything? So if they say over the last 5 years, this apartment building, they've been offering, 6 weeks of concessions, even after lease up. They have only been able to grow rents by 2% over the last few years. And then they're telling us over the next 5 years, rents are going to be twice as much as they currently are. They're going to be 100% occupied. I'm kind of like, I don't know if I believe that. I need to see how it's been performing and to see, well, what's changing? Are you changing who's operating the real estate? Are you doing a renovation plan? And that's why you think rents are going to go up. But if you don't have any foundation for why you think rents are going to double next year, I don't necessarily agree with that. And so based on that, I'll adjust our model, which we keep internal to us, because when we're working on a deal, we want to come up with our pricing. We want to come up with the terms of our venture to benefit us, but we also want to understand how it benefits them, because if we know, okay, well, what did they pay for this real estate? If we're going to make them an offer and it's less than what they bought it for, they're not going to work with us. And so knowing what benefits them, how their cash flows work is also helpful for us to see if they'd want to work with us.
Hi, my name is Jay. I'm a senior, and this past summer, I was interning at a real estate private equity shop in DC called Penzance. So I'm interested in hearing about what parameters you guys have in the special situations arm. So is it by asset class? Like, are you mostly looking at non-traditional asset classes, or is it by capital structure? Like, what would make you interested in a deal? And then also, how does the equity work from your side? So are you guys like within a fund, like a larger Crow fund, or when you're pitching to IC, like who sits on that IC?
That is a great question. So our group is definitely unique in that we are looking to provide capital for people who are in tricky situations. So our group is called Partner Solutions because we're looking for partners, we're providing solutions. We're not coming in to take over the real estate completely. We don't have a big asset management group who's going to manage the assets. We want to come in with someone who says, like, for example, they love their real estate, they don't want to get rid of it, but one of the partners is retiring next year and he has invested a bunch of his own capital. He wants to pull out, but they don't want to sell. It's not a good time for them to sell. We could come in as a partner and say, we know you want to stay in, we'll bring equity in, and we'll be your partner moving forward. Or another example is a group that had only invested with high net worth individuals and friends and family money, and they had never worked with institutional investors, but they were getting ready to. They had grown a ton, they were seeing great returns, they wanted to expand, but when they were getting, $1 million investment here, $2 million investment there, they weren't able to grow at the pace that their business could. So they came to us and they said, I know we have never worked with institutional money before, we think we could, are you guys ready to partner with us? And we thought that was a great opportunity to let them scale in a way that they might not have been able to otherwise. So when we look at a deal, we want to find something that's interesting and that's a little unique because we have very flexible capital. We have a different timeline horizon. If a deal is in a fund, they might be forced to sell, forced to find another equity partner in a shorter timeline than they wanted to. We had another deal that was brought to us. They wanted to hold this real estate indefinitely. They had family ties to it. It was their grandfather had developed it. They never wanted to sell it, but they wanted to recap and gain some liquidity. So they came to us because they knew, we don't necessarily have to sell this in 3 or 5 years. We can hold this with you if it works for us and if it works for them. So definitely it's a little bit of a different path, but we're open to traditional real estate in that, but it's got to have something kind of that makes it a special situation. We're definitely focused more on industrial and apartment right now. I don't think I've seen an office deal come across my desk in years. Even when I was at AEW, we would get a couple life science, which is office-y, but that's definitely slowed down a lot because that got pretty built out. And I also haven't really looked at any retail deals in the last year, at least, because that's just not where the demand is and not where the growth is. So we have separately managed accounts right now. We have clients that are sovereign wealth funds, that are state pension plans. So that's, a retirement fund for teachers or firefighters or state employees, and they're able to invest that pension fund into our real estate. But we're working on developing a fund structure, and that would be launching next year. And I think that's going to be kind of exciting to see because I've never been with a group while they've been launching a new fund and seeing how that's going to go with marketing. And yeah.
My name is Eric. I'm a sophomore here. Do you anticipate your Boston office specifically transitioning into more traditional deals with the lowering of interest rates, or kind of keeping with the niche structure that you have now?
I think our plan is to keep with the niche structure. That has been kind of what we were brought in to do. I think that some of the opportunities we've looked at are secondaries, and I think as companies with larger funds are looking for liquidity, that's something that may become more frequent for us to look into. Which is when we're not necessarily buying certain deals outright. We'd be buying a group into all tied up together as an interest all together from a fund or something like that. And with that case, then you're not necessarily underwriting each individual asset because there could be hundreds of them. And so it's just a different strategy, and that's something that maybe we'll do as the interest rates come down But I think that because what we do, it definitely was helped by interest rates being so high because it brought us different kinds of opportunities. I think that there will always be groups that are either looking to recap or looking to gain liquidity for one reason or another. So I think we'll be keeping down that path. But I also have been with the group for a year, so who knows? Things could definitely change.
Hi, I'm Kathleen, and I'm a sophomore studying econ here. And I just want to ask about the Women in Real Estate group that you mentioned and what that support means to you.
Yeah, I love being involved with the Women in Real Estate group at AEW. So while I was there, they started a few different employee resource groups, one of them being a women's network. And we started a peer advising group where you would meet with a group of women at your level, so like analysts or associates, and then once a month you would meet with a senior level woman, so director level, and you were able to kind of get to know people, get to know peers, ask stupid questions, ask advice, but then also connect with some of the higher up women at the company. So it was really wonderful. I think definitely being in an office that's just getting started, that's quite small. When you have 4 people, you can't really have like, all right, we're gonna have like Women's Day when it's just you and one other person. So that's definitely changed things. And so I've definitely wanted to stay connected in other ways. So I went to the BC Women in Real Estate event that was at Collier's last year, a couple months back. That was really great to kind of stay connected to women because I think it's definitely an industry that is lacking in diversity. And so it's definitely great to stay connected and has meant a lot to me, especially during my time at AEW. That's honestly how I found my current role, was through another Women in Real Estate group. One of my mentors there knew my future boss at my current role. So
thank you, Lindsay, for coming. And give her a hand.
thank you for having me.